What's going on, you guys? Welcome back to another video by Real FX. In this video I'm going to be teaching you about a Quasimodo setup, and I am also going to be breaking down this trade with you guys. As you can see, this trade is a 1:30 risk reward trade, so this is a very good trade, and I am also going to be sharing with you an indicator that we use. It's a special indicator that we use. I'm going to be giving you the secret of that indicator so that you can use it to find these setups. This is one of the best setups you can ever find, and if that sounds like something that you're interested in, stick around till the end of the video, and I am going to see you guys right after this intro. Now, before we continue, guys, I want to tell you about this amazing event that is going to be taking place. I'm talking about the BrokersView Expo 2024 event that is going to be taking place in Dubai. Now, this event is going to be taking place on the 16th till the 17th of April. Now, this event is going to help you to stay updated on the latest market trends in Forex, stocks, and crypto. It's going to allow you to meet industry experts and get valuable investment insight. Now, to participate in this event, I'm going to leave a link for you in the description, and go ahead and click on that link, and it's going to take you to this website. Now, on this website, you can see the number of days and the hours, the minutes, and the seconds which are left till the beginning of this event. Now, go ahead, scroll to all the way to the end of the page, and then this is where you can find the form that you have to fill. It's a very easy form to fill. Just have to fill your name, your last name, your email address, and your mobile number and your country. Okay, and then you just click submit, and then you are done. And this event is going to start around 10 a.m. all the way to 6 p.m. So as you can see, the time zone here is UTC plus 4. My time zone is UTC plus 2. It's GM2 plus 2. So in my time zone, this is going to be a bit different. So that's it, guys. If you want to join this event, click on the link in description and follow my instructions. Let's look at the basic setup. Now, on this basic setup, this is a basic Quasimodo setup. As you can see, we have an example of an upward trend that later changed to be a downward trend, and we know it's an upward trend because we have what? We have higher highs and we also have higher lows. So this here is a low, this here again is a low. Okay, and because we are on an upward trend, simply means you're breaking structure to the upside. That's a breakout of structure, and that is also a breakout of structure. So this is just basics on how we map out our structure. You know, we do this a lot in our channel. Now let's look at a basic setup and dive deep into it. Okay, so the basic setup, the very most important thing that you guys should know is that we only use the basic setup when we just tap into a significant zone or a significant level. Let's say we had a fair value gap or an order block in this area. Okay, now after tapping into this order block or this fair value gap, then the market retraced to the downside. The reason why the market has to tap into a fair value gap or an order block is because if it didn't tap into an order block or a fair value gap, then we are more likely to be looking for buys here. Typically, as SMC traders, we are still going to be looking for buys here to take out this structure here. Now, it's very important that the market taps into a significant point, a fair value gap, or an order block. That's the first part. Okay, now where would be our QML level? Now this is our QML over here, this is our QML level right over here. Okay, so we are seeing when the market retraces back into this area over here, let's say we have a zone. If the market retraces back into the zone, we are going to take a sell. Okay, now when the market is approaching our zone, we would expect to see a bit of liquidity here being generated, just to give the market, you know, liquidity is the fuel of the market. No liquidity, no movement. Okay, so we want the market to have its fuel so that it can push to the downside when it reaches our QML level. So where do we enter? We are most likely going to be looking for an order block right around this area here. Okay, so this area here is going to be giving us an order block. We are going to enter using an order block. So it's gonna be something like this, and we're gonna have another candlestick that is going to engulf that previous candlestick. And let me change the color of the candlestick. Let me make it red like that. And as you can see, this is our order block here. We're going to use this order block. You can enter at the 50% of the order block or take the order block as it is, depending on your strategy. But at a real FX, we take the whole order block, because sometimes when you take only the 50% of your order block, you are most likely going to miss trading opportunities. Okay, so we have this happening around this area, and we take our sell position over here. You know how we do it. Take profit. Our stop loss is going to be right around this level, the high, and then our target is going to be what? It's going to be the low based on the time frame that we found this order block or this fair value gap. So it's going to be the low of the 4-hour time frame. For example, if this order block is on the 4-hour time frame. So I'm still gonna dive into the charts to show you how this works. And if you're new to the channel, don't forget to subscribe, because we teach valuable information on a weekly basis. Okay, so this is going to be our take profit, is going to be the low, and this is going to be our entry, our stop loss. Okay, so what I like about this setup is that you get to have a high risk reward ratio. Okay, so it can range around 1:5 all the way to 1:10. And if you want to increase your risk reward ratio, you can always, when the market reaches this part over here, this part here, which is your QML level, another thing you can do is to wait for this kind of a structure. Okay, a minor change of character, and then this will also reduce your risk in the market and will also increase your risk reward ratio. So let's say this is again your minor QNL, and then you enter from this level and then targeting the low. So this can double your, it can double or triple your risk reward ratio. From, let's say it was 1:5 using the basic way, it can move all the way to 1:15, and then you get to risk less to make more. Okay, so if you were risking like $10 to make $50, now you're risking $10 to make something like $150. Okay, so that's how it works. Now I'm gonna go to the chart and I'm gonna show you how this works like and how this looks like in the real chart. Right guys, now we are on the real chart, and I want to say, if you haven't subscribed and you've made it this far, don't forget to subscribe. And if you do enjoy the video, you do find it fruitful, at the end of the video, don't forget to give it a thumbs up, and that is going to help us grow, and it's going to motivate us to keep on making these fruitful videos. Okay, now we are going to focus on this area here. As you can see, we had this on the 4-hour time frame. We had a push and then a reversal into this order block over here. Okay, we have that order block over there. As you can see, we have some liquidity here. If you don't know anything about liquidity, be sure to check some of the videos that I've made in the past. Now, because we have this order block, like I said, when we just tapped into a significant order block on a higher time frame, we dive deeper into a lower time frame to look for the basic setup. Okay, so what I'm going to do now is to dive into a lower time frame, like the 15 minutes time frame, and then I'm gonna look for that area we just highlighted, and then we're gonna see how you could have taken the trade and how you're gonna find a higher risk reward ratio trade on this setup. Okay, so that's our liquidity, and then we tap into our order block like that. Let me change the color to be think gray will do, and let's reduce the opacity of that. Okay, it's fine like this. Let's change the color, the background to red like that. Okay, and the opacity lower like this. Okay, now let's map out our structure towards our order block. So you can see here we had a breakout of structure, okay, and we had another breakout of structure. Okay, now a typical SMC trader would be looking to sell this market. As you can see, we had a push to the upside, we sold, a push to the upside, we sold. So here you'd be looking, a typical SMC trader would be looking to sell from this order block here. I don't blame them if you are using, you know, the things that many people are using in forex trading. You are using the same SMC that many people are using. You are more likely going to be selling from this point, but at real FX we don't sell from this point because we just tapped into a very significant order block on a higher time frame. So we know that there's a higher chance of a market reversal. Okay, so another thing, another tool that we use, this is a secret, but I'm gonna give it to you guys. When we are in a situation like this, we also pull out this RSI indicator. Okay, the secret is not the RSI. Many people know the RSI, but the secret is that when we reach into a significant order block, the RSI shows us, it also gives us confirmation that we should expect a reversal. Okay, so as you can see here on the chart, we have lower lows. From this low to that low, this is a lower low movement. Okay, but if you go to the RSI indicator, this is the low and this is a higher low. So we have a lower high movement. As you can see, there's some sort of a divergence. So when we have a divergence in the market, we know that there's a higher chance of the market reversing or changing its direction. Okay, so as you can see here from this area, instead of selling from this point, putting our stop loss somewhere there and then our take profit being there, what we do is we wait. Okay, so we wait for what? We wait for the market to tap into that order block, that breaker block, that area that many people were going to use it as a reversal to our QML. Where is our QML? You know, it's this high, it's this low here in this case. So the previous low is always the QML. So this is our QML, and then we are going to be looking for trading opportunities in this zone. We are going to look for trading opportunities in this zone. So what did the market do? The market tapped into that zone that many people will be looking forward to sell from, and then it dropped to the downside. And at real FX, this is where we start looking for what? For buys in this area. This is where we start looking for buys in this area. Now look what happens after that. Okay, so when we look for buys here, the market comes into the zone and then we start buying from that area. We put our entry right above this order block here. Let me zoom in so that you can see it properly. And then where is our stop loss? Our stop loss is going to be the low of that order block. Okay, and where is our take profit? Like I said, our take profit is going to be the high, the recent high or the recent low of our higher time frame, because we are taking a trade based on a significant area from a higher time frame. So this coming down to the 15 minutes is to see the minor structure that is taking place and to also find better entries. Because imagine having to use this as the stop loss. This has to be more than 20 pips. But if you compare this to this, you can see this is like 3 pips here, which we're going to be risking. So you get the opportunity to risk less to make more. Okay, so imagine that is our entry, and where is our take profit? Our take profit is going to be this high over here. This high over here is going to be our take profit. Okay, so if you are liking this, guys, don't forget to like the video, Don't forget to subscribe. We post such content on a weekly basis, and we have been receiving some good feedback from people who are watching our videos, how our videos have been changing their lives. Okay, and these are strategies that we also use. We don't just give out things that we don't use. Okay, we give out things that we use. Okay, as you can see here, it's a 1:30 risk reward ratio. That simply means if you are risking like $10, you are gonna make around $300. Okay, so you are gonna make around $300. That's a good risk reward ratio. And that's it for this video, guys. I hope you enjoyed the video, and watch out for my next video where I'm going to be showing you the advanced QML setup. Okay, so don't forget to like the video, click that notification bell so that when we post the next video about the advanced QML setup, YouTube will notify you and you'll be able to watch the video immediately so that you can start using whatever I'm going to be saying in that video to make more money. Remember, guys, making money makes sense.